traders, this is our gold weekly review. My name is Angelo Zittis, and we start with this week's title being Bullion preparing for market uproar. Bullion maintained its sideways movement in the previous days as analysts, traders, and market participants anticipate the upcoming FOMC meeting on Wednesday, where the view of the Fed will be the main event of the week. Yet, other important aspects of the gold world will be mentioned in this report, which could be worth taking a look at due to the fact that they could be market movers in the future. Our first point is the FOMC meeting. Starting with the FOMC meeting and our view on the matter, a 25 basis point rate cut is relatively priced in already. And even though all financial instruments associated with the US dollar may react accordingly, this may not be the main event of the meeting. We expect volatility for bullion to rise during the press conference, where the Fed's Chairman Jay Powell will be giving the Fed's overview on the economy, and headlines that will probably create movements will prevail. Gold traders should be aware that the strong volatility in any direction is possible for the precious metal. Traders should take the necessary steps to protect themselves, as the event may have major moving effects. The general idea is that the market will receive information on whether things are getting better or worse, and if the Fed will need to go even further with its rate cuts or other steps to deal with the economic uncertainties. We do not believe there is a predetermined outcome scenario for bullion to move in a certain direction like other analysts or even history indicates. Our view is that anything could happen. Very similar to what happened with the ECB monetary policy meeting last week, where most of market participants expected a negative impact on the euro, while the outcome was quite the opposite. Traders should prepare themselves precisely for this kind of market environment and perhaps even more volatile. Moving to our second point, further risk transferred to safe haven markets. On a separate note, some reports relate bullion to the latest terrorist attacks in Saudi Arabia. Our opinion is that the effect on bullion prices has been minor for the time being, and we would not expect volatility to rise for the precious metal as long as the matter remains unchanged. However, we would advise gold traders to keep an eye on the specific subject, as any developments of the matter, especially a military move or interference of other countries like the US in the Middle East, could significantly move gold prices. In the past, we have seen gold prices react to the dispute between the US and Iran in the Strait of Hormuz, where tensions were lifted. The event raised risk in the financial markets, and gold prices got some support during the incident. Also, any impact on the commodities market is transferred to the safe haven market because various important industries and sectors could be affected. Sectors like the banking sector, with its interest rates and transactions, or industries like the manufacturing industries or trade flow between countries and other things, all these could affect gold prices. Moving to our third point, the other significant events. Now, please note other significant events during this week, which include interest rate decisions, are those of Bank of Japan, Bank of England, Switzerland National Bank, and Norges Bank. Now, these events may or may not mean anything to gold traders. However, the outcome of the meeting that will, altogether with the Federal Reserve overview, form a general sentiment on how various central banks see and how they rate the global economy's performance. And this could be of significant usefulness even to the average gold traders. So make sure you keep that in mind. Moving now to our technical analysis. This is gold's 4-hour chart. Now, gold is currently trading very near our R1, which is the 1500 resistance level. The round number level could be considered as a barometer for gold traders, as they may tend to execute trades or modify or close or open trades depending on if the precious metal is trading above or below the specific price. In the latest sessions, gold has moved in a sideways motion with bearish tendencies, even though it did open with a positive gap on Monday. From a buying perspective, the most possible stops above the R1 resistance level is the R2 1515 resistance level, which was tested in the previous week, but the bulls were unsuccessful of stabilizing above it. However, above the R2, the next possible stop is the R3, which is the 1530 resistance barrier. Above the R3 would be a clear indication of a strong bull market that could lead to our 1550 R4 resistance level. Yet, if the bears are to gain control, the S1 1485 level has proven to be very strong, as it was tested various times last week but was not broken. In the case that the bearish market is stronger this time, the next possible stop lower could be the S2 1470 support line, and even lower is the S3 1450 support hurdle. Now, the RSI indicator below our chart confirms a rather indecisive bullion market, as it is currently running very close to the 50 level. If you've heard something in this report that you found useful, make sure you apply it to your trading. That's the whole point. Thank you very much for your time. Enjoy solid trading, and we'll see you soon.